Okay, well, here this morning to join me is Ed Bowsher, who's from lovemoney.com. Good to have you with us, Ed, this morning.
Hi,
we're going to be talking property this morning, aren't we? Because, of course, well, hopefully we're at the back end of the credit crunch, although I think there's still some great uncertainty out there. But in terms of property, it's a difficult time. We're kind of still in limbo, really, aren't we? We have had a housing price crash. And now we don't really know where we are. A little uncertain, aren't we?
It is a bit. I mean, we've had some very modest rises in the last few months, and I think we might see some more modest rises just in the next couple of months. But I think there's a good chance that prices will fall later on this year or next year. And what's almost certainly not going to happen is we're not going to have big rises. So if you're thinking, oh, shall I buy now? Shall I wait 6 months? Shall I wait a year? You might do quite nicely because prices will fall, and in worst case, they'll have just gone up a bit. So there's no rush to go out and buy at the moment, I'd say.
Is it a good time for first-time buyers now, though? Of course, the stamp duty thresholds have been raised recently, and we can only say hooray for that. You know, something out there for first-time buyers. But in terms of mortgage deals, is it a good time to be a first-time buyer?
There's some great mortgage deals out there, and I think a lot of first-time buyers, they want certainty. They're worried that interest rates might go up in a year or so and they can get caught out. And so there's a lovely deal at the moment. It's a 5-year mortgage with the co-op, and you can get locked in at 4.49%, and you know what you'll be paying every month for the next 5 years, guaranteed. And I think that will be very attractive for some first-time buyers.
And that's a good, low, reasonable rate you can see to take you through those 5 years.
It's a good rate for 5 years. Now, you will see out there much lower rates on offer. And, you know, if you want to get the lowest rates, then there's more risk because you can get a lower rate, but the rate may rise. So, I mean, one deal at the moment is a really good deal. HSBC, they're offering 2.49%. But there's no guarantee that rate might move. So if the Bank of England's base rate goes up, then that rate will go up. But the good thing is you can take out this HSBC deal, 2.49%, and then if rates start going up, you can switch to another mortgage and you don't have to pay a penalty to HSBC, which you would have to do with a lot of other mortgages.
Now that's a very unusual situation almost, isn't it? I mean, it places itself perfectly into the market now, of course, because variable rate mortgages, people are worried, aren't they? We have no idea what necessarily will happen with interest rates even within the next 12 months.
But it is going to be attractive. I mean, I personally think that over the next 12 months, the best bet is interest rates won't go up by much. You know, the Bank of England uses interest rates to keep inflation down. Inflation isn't going to rise much, so the interest rates probably aren't going to rise much. But I'm not certain. No one's certain. Anyone who says they're certain is either a genius or a con man. So if you want that certainty, go for the fix. You want to take a bit of a risk, go for that HSBC deal.
Tell us a little bit about lovemoney.com and what it has to offer in terms of information.
So we're a personal finance site, and you can compare mortgages on our site, on our tables, and then we also have in-house brokers who you can ring up and get free advice from them. And I think it's a really nice combination because there are lots of mortgage brokers out there and they're great. It's great to get advice from someone, but for various reasons mortgage brokers can't tell you about all the best deals. They can tell you about a lot of the best deals, but not all the best deals. So the best thing to do is speak to a broker, and then on the web you can find the deals the brokers can't tell you about. So that's the combination to go for. Funnily enough, we do it at Love Money. There are other places too, web plus broker, then all your bases are covered.
And it's a good place almost to kind of do your homework, whichever way you decide to go.
Whichever way you decide to go, and there's lots of articles. We've got regular articles telling you what are the best deals out there and giving you tips. If you're looking to buy a home, what are the tips to think about to get the best price? If you're selling a home, again, what are the ways that you can make sure you sell your home for the most money? So there's loads of advice there.
Well, listen, if we can help you at all this morning, while Ed's with us this morning, why not give us a quick call? Any questions you have, maybe you're in a situation where you're either trying to buy for the first time, maybe you're reselling, wondering whether it's a good time, depending on where you are in the country, what kind of situation you're in. If Ed can help you while he's here, why not give us a call? 0161 834 5727. That's 0161 834 5727. Get some good advice while Ed's with us, and of course he's available via lovemoney.com as well. In terms of good times or bad times, a lot of people are in a situation where they either want to downgrade, they want to downsize. Maybe it's a family where the children have flown the nest and it's time to look for something smaller, or indeed if you're upgrading. is now a good time to do that? There's still a lot of uncertainty out there. I don't think many of us can look forward 12 months and think, well, actually, you know, we'll be the other end of this. We'll be in a much better, stronger position economically in the country by then.
Well, I think the thing is, I suspect house prices aren't going to move that much over the next year. They might fall a bit. They probably won't go up by much. So yes, there's this sort of uncertainty about the economy, but really, if you're thinking of selling a house, the best thing to think about is your own personal needs. You know, do you need the money? Are you about to retire? And not obsess too much about house prices, because you might get it wrong. And if you try to be really, really clever, you can just end up getting yourself in a mess. And again, if you're a first-time buyer, you know, fine, house prices might be a bit lower in a year's time, or they might not. But if there's a good deal out there, and if you've got the money to go in and buy, then just go in and buy, because you can wait forever for the perfect moment and then waste money renting.
Now, something that comes up an awful lot, Ed, is the estate agency fees. They've remained pretty steady and constant, even considering the depression in the housing market. There are less properties available. There are less people looking to buy at the moment. We know that, but fees do seem to have crept up in places as well. What can we do in terms of preparation work, and what kind of bargaining tools do we have in terms of estate agents?
Well, I think the crucial point is you don't have to have an estate agent anymore.
Oh, really?
There are websites out there. There's one called Tepelo, which is run by Sarah Beanie from Channel 4.
Okay.
And you can put your house up on the site for free, and then you can deal with the wholesale and deal with callers yourself. And they've got plenty of people visiting the site, so you know it's got critical mass.
Okay, I'm sure a lot of people probably aren't aware of that kind of site.
And I think that's a new thing, and I think it's going to get bigger and bigger. Now, it's not right for everyone, because some of us don't have the time to show people around. Some of us will worry and want advice from an estate agent, and that's fine. I think for many people, an estate agent is the best thing. But the great thing is, when you see an estate agent, you can say, hey, I've heard about this site Tepelo and some of the others, you know, I'm thinking of doing that. Can you give me a good rate, please? So negotiate, be tough, and you'll perhaps get a better deal.
Should you be afraid to? Because often when an estate agent comes to visit you first and maybe values your home, you almost treat them in a special way, don't you? You think, well, actually, if I treat them very, very nicely, extra biscuits with the tea, hopefully the valuation of the house will be a little bit higher. And of course, that has no bearing on the price you get. But are you always in a strong position to say, okay, well, you've told me it's 1.75% that you will charge me. Have we really got the leverage to be able to knock that down? Do they have the flexibility to bring it down?
Many do. Some estate agents may not negotiate, but many do, and it's worth a go. And let's not forget, you know, estate agents, they're not busy at the moment. They haven't got people walking through the door every 5 minutes, so they need the business. So now's a good time to be tough and try and get a good deal.
Okay, Maria's just texted into us. She's a first-time buyer. She's asking the question, should she wait for the recession to pass now until we're really out of the woods, or is now a good time to really go out and start looking for that bargain? I suppose as a first-timer, there's a lot of property out there, isn't there?
There is a lot of property out there. I mean, I personally think the economy, it's not going to grow big time for the next 5 years. So we're going to have slow, sluggish growth, or we're going to go back to recession. And that means prices probably won't go up by that much. So there's no need to rush, but equally there's no harm in going in now. Fine, house prices might be a bit lower in a year's time, but you don't know for sure. And I'd say to Marie, if she's got enough money for a deposit, if she's ready to go, if she's reasonably confident that she's going to be keeping her job over the next couple of years, then probably go in now and start looking now and buy.
I've heard a couple of times recently said in the news, because interest rates are so low, for people who have a glut of money available to them, that actually paying off mortgage interest or mortgage debt is actually more effective in a way than the kind of rates you're getting in terms of saving rates at the banks. What's your opinion on that?
That's definitely true for some people. The savings rates aren't very high at the moment, so it does really depend on what rate of interest you're paying on your mortgage. Now, if you're paying a really, really low interest rate on your mortgage, then so if you're saying just because it's an old deal, you're paying say 1%, you might be able to get 3 or 4% on your savings account. So on that basis, then fine, put it in the savings account and just leave it, and then you're making a profit and you can pay the mortgage off later. But if your mortgage is say 3% and your savings account is 3%, pay off the mortgage, because it's good for tax reasons, and it's also just good to keep paying down that mortgage, and then your mortgage free day will be earlier.